was really a monster quarter. You had, against pretty lofty expectations heading into the print. You had a really convincing beat and raise, better than expected sales and margins across all three businesses. So it's not just the AI power gen business. And actually, I would say one of the more encouraging takeaways from this print was the performance in their construction business. Which really suggests that this recovery is broadening out, where you have a lot of the cyclical tailwinds starting to kick in and kind of enhance what we're seeing on the secular side with the data center build out. Orders, again, very strong in the quarter, pushed backlog to another record level. We're north of $72 billion on the backlog. They're already starting to take some orders out to 2030, so above average production visibility. There's really a lot to like in this report. Question now becomes, is this as good as it gets? So we shall see from here.
So, Chris, as I understand your coverage of machinery and the Deeres of the world, the Cats of the world, I mean, I think of that as classic cyclical stuff. But these stocks are trading 35 times earnings. I mean, you're like a growth stock industry now. What's going on with your industry? Is it still cyclical?
It's hard to wrap your head around some of the valuations in the space. Even this so we had Caterpillar. If you look over the last year, it's really traded in line with a lot of the AI and hyperscaler names in terms of just the moves in the trajectory. It's been one of the top performers in the industrials world because of that data center exposure in their power generation business. At the end of the day, I still believe this is still a cyclical company. They had just been, fortunately positioned to capitalize on some of this build out with their large engines and reciprocating in natural gas engines, which initially were used more for backup power on the data centers, but are becoming increasingly used in prime power applications. But this is more than just a data center play. You're just beginning to see, I think, the fruits of that in terms of the construction and mining recovery, which we think have some legs into 27 and 28.
If Caterpillar has more demand than it knows what to do with, and that power and energy unit has grown to be the largest for Caterpillar by sales, for the stuff that it can't take on, who benefits? What other companies are kind of, getting some of the business that Caterpillar can't take on?
Right, so it's a race to add capacity at this point. Caterpillar is increasing their large engine capacity by 3x through the end of the decade. Turbines by 2.5 times through the end of the decade. Cummins, another one of their competitors, they're also significantly increasing their capacity. Really, it's just a matter of who has product availability as to who's getting some of these contracts right now. The industry really can't add capacity fast enough. That is one of the overarching concerns now. Are we adding too much capacity? But right now, I mean, from all indications from this report, it doesn't seem like there's any signs of that slowing down. And in fact, some of their lead times have actually extended this quarter. Like I mentioned, some of their customers are already taking orders out to 2030, which, highly unusual for them at this point.